Time to talk about your money with KMIR News financial expert Brian Amadei. Tonight we're going to talk about volatility really in the market. Lost 1,000 points in 2 weeks. We got 350 of it back in 2 days. You were talking about it the other day, this volatility index.
Good evening, Gino. Yes, the volatility index is something that I watch to see, which direction the market's going to go. It's typically a precursor index. It measures the volatility in the marketplace. Back in 2008, for example, when the markets were exceedingly volatile, the VIX index, VIX, got all the way up to 63 at some point. The higher that index, closer to 100, the more you're into a total meltdown mode. Typically, the VIX trades right around 15 to 18, with the last run up, the run down in the market, it got all the way up to 18, 19. With the run up in the market the last couple of days, the VIX is sitting right around 15. Last year, the VIX index was right around between 9 and 13 most of the year.
Right.
Exceedingly abnormally low, which is why you saw pretty much a one-directional market, which is not normal. We're getting back to trading fundamentals. Today, the payroll information came out. It was mixed, but it shows that we are on the road to recovery, and it backed up all the other economic indicators that we're looking at.
Let's talk about volatility. What's the most common cause for it, or what does it tell you is happening in the world when you are seeing a volatile market?
So the market is a precursor. The market's a forward-looking entity. So it's a crapshoot. So you're really heavily dependent on data that's coming out of Washington. The problem is that while they've been doing quantitative easing, the government's been the buyer of last chance. They've basically been backing the bond market. As that starts to subside when they're reducing their quantitative easing or the amount of bond buying that they're doing, we're going to get back to trading fundamentals. We're going to be interested in corporate profits. We're going to be interested in different things that are coming out from companies or different sectors. The emerging market debacle that we're starting to see unfold, that'll have pressures on our market. So instead of having a buyer of last resort, putting a floor in the market almost and having a one-directional market, we'll see ebbs and flows in the market. And that's completely normal, by the way. The market can't reach new highs until it has a meaningful pullback, so it flushes out some of the speculators. Serious investors can get back in. I look forward to pullbacks.
And you still think there might be a correction?
I think we still have a little bit more room to go on the downside. The market was exceedingly oversold this week, so a little bit of this rebound is just fundamentals, as technicals coming back into play. However, I do think that we may have a little bit more pressure over the next month or so, but I do think at the end of the year we'll be higher than we were at the beginning of the year.
There you go. All right. Thank you, Brian. As always, Brian Amadei is a partner and managing director with Hightower Investments in Palm Desert. He'll be joining KMIR News at 5 every Wednesday and Friday to talk about all things money.